Hello, everybody. Welcome to yet another session of Beyond Bulls and Bears. As usual, we'll wait for 30 seconds for more people to join before I start talking about the topic for today. Welcome, everybody, to the session Beyond Bulls and Bears. The topic for today are ceasefire, what does it has an impact on the markets, and second is about the result season. The last week, what an eventful week it was. Full of emotion and volatility, full of decision making, full of reading and hearing. As the much awaited action by India against the Pahalgam attack led to a counter action by the Pakistanis, leading to, I will say, India Pakistan on the verge of a war. Why I say verge of the war? Because from whatever I have read and listened, neither side crossed the LOC, and hence calling it a war will be a bit premature. We sure were heading for a full fledged war had the ceasefire not happened yesterday. So let's understand the implication on the markets. I will not want to discuss on who had a upper hand and who got what damage because I think the media is controlled at both the ends to show a better picture for their own country. And that doesn't impact us, to be very honest. So let's not go there. What impacts us and what is the agenda for us remains related to us and our investments, which is the capital market. So the way I look at it is from a capital market perspective, this is the best thing which could have happened. The retaliation from India, which was an anticipated move, happened, and it was a stern one based on the communication done by the Indian authorities. What it also led to is a retaliation from Pakistan and stuff, which means the process of uncertainty is done. While this was getting uglier, international forces mediated a ceasefire between the two countries. While there were some news of violation last night, I believe that that was minor in the nature. Otherwise, things would have gone out of proportion by now. The way I look at it from a market perspective, the big event is over with a minimal damage. And I think based on what I have seen on the data for the last 2 days, both in terms of direction of the market and the data, I think a lot of people went light ahead of the weekend because things were looking ugly. And hence, I think the first thing which will happen is the markets will open top higher. Now, will that see a follow up buying or not is a function of the second factor, which is the sentiment and the earning season. But let's continue with the ceasefire first before we move to the earning season. This ceasefire does is few things. India has very clearly said that any further terrorist attack will be taken as an act of war, which means India's message is very clear that if you do anything, we will not stop. This implies that probably Pakistan needs to be a lot more better prepared if if any terrorism has to happen from their side. This is under the assumption that the terrorism happens under their knowledge. So either way, Pakistan will have to ensure that there is curtailed terrorism from cross border, and hence it augurs well for the Indian economy. What also it does is it gives India a fair view because it's fair to assume that they know what happened at the ground, right? So they get to know where do they stand in reality versus the Pakistani. And hence, it is very important that India's channelization on defense will happen henceforth on that basis. Will it lead to a higher defense expenditure and hence a fiscal issue? Probably that may be the case. We will have to wait for communication on that. And if a fiscal is missed because of this for 1 year, will it have any impact on the on our G6 bonds or ratings? I personally don't see that. From an equity market perspective, I think India has shown the power of strength and maturity on this topic, which is something which global investors will like. And hence, we should continue to see global flows into India. My sense is we corrected 2% during this phase of attack and counter attack. We should at least recover that at the open tomorrow. And post that, we could see some follow up buying. But I think the volatility which increased because of this should come down. Parallelly, what has happened at the global level is that Trump had a meeting with China and he said it was a good meeting. Russia had a word with Ukraine. So I think globally we are seeing a lower risk off and a higher risk on base now, which means volatility may come down and the direction of the market may go up. What will go up, how much will it go up, is a function of what happens on the earnings. So let's come to the earnings. The earnings this week broadly again had the same direction, that the growth was better than the last 2 quarters, but the margins remain subdued. The commentary gives us a view that if inflation comes down, the margins will come back. And hence, the biggest parameter which I will look for here on is inflation and the impact of inflation on the earnings. Because from a revenue growth perspective, I think enough triggers are there to make me believe that we will have a superior growth in FY26. Coming to FY26, barring Q1, Q2, Q3, and Q4, we'll be working on a lower base. And hence, the street estimate of a 10% revenue growth on Nifty or a 10% EPS growth, sorry, on Nifty seems to be at the lower end for me. I believe we are heading for a 15-20% growth. Probably IT may drag it more towards 15 rather than 20, but X of IT, I expect pretty good growth from the large caps space. Does it mean that all is fair and uncertainties are over? The answer is no, which means volatility will be there, though at a lower pace, and which again augurs well for large caps. If you remember last week also, I explained that in the era of uncertainty, the most important thing we need to do is increase the large cap proportion and increase the tenure of the portfolio to ride the upside. We at StaG never took a cash call in this uncertainty because we realized that the probability of downside is lower because the probability of a full-fledged damaged war is lower, and that seems to have worked for us as we never took a cash call and we were fully invested. Hopefully our investors will reap the benefit of it not only in the coming week but coming months. We remain focused that earnings is going to be the driver of the growth. We remain focused on the fact that the earning growth for FY26 will be much superior to FY25 because FY25 was impacted by the government expenditure being lower due to elections. We can continue to talk about war because that's a talking point across the board. I do not want to do any talking beyond the point on that topic where that doesn't does any value add. The value add remains the same, that India is a strong economy. This 3 days of action also gives us the confidence that India is a strong military country also now, which means that if the economy does well, the markets will do well. India has shown a lot of maturity in this, and this reward I think India will get in terms of the recognition both from a global, I will say, governments and countries. Not only that, but from global investors. I limit my conversation to this much today. We'll wait for any questions. Else, we'll want to sign off with the hope that nothing major happens between here on and we enjoy the Teji of next week. As usual, we'll wait for a minute for questions, if any. With no questions, we'll end the session here. Thank you for listening to us. See you guys again next week, same time.